Hello everybody, hope you had a wonderful weekend. This is your Monday edition of FreightWaves Now. Zach Strickland will be here very shortly to talk about overall national volumes and how things have been changing since the first week of the month has ended, and now we're heading a little bit closer towards mid-April. And also, just after the beginning of the quarter has gotten started, we're also going to talk about the Philadelphia market specifically and some positive things that are happening there, used truck prices, overall capacity, and what's going on across the country. And he'll be joining us here in just a few minutes. I'm meteorologist Nick Austin here at FreightWaves, and we're going to start off by talking about the weather and just a few spots of the country that are at least seeing some disruptions, possibly at least slowdowns in some freight movements today because of some wintry weather. Even though it's spring, we know that winter lasts longer in some parts of the country, that's for sure. And one of those parts of the country is the mountain areas of the parts of the northwestern United States. We're seeing a little bit of snow here and there. It's heavy in spots across the northern Rockies. A lot of heavy rain across the I-5 corridor from Northern California up into Oregon. That should be fading out hopefully later tonight. We have a lot of heavy rain with some heavy thunderstorms across the southeast, so that's going to affect travel across Tennessee, some of the Gulf Coast states as well, and then tonight into the Carolinas. There could be some severe storms too. There'll be gusty winds here and there, possibly large hail, maybe even isolated tornadoes across parts of the southeast. And then the big area of snow has been across Maine this morning and also during the afternoon hours. And into tonight, there's still going to be snow falling across parts of the I-95 corridor up in Maine. That should be winding down during the overnight hours. No large-scale areas of really windy weather, so that's the good news. But if we go to our next map, this is a new thing on sonar that we have, which shows 24-hour precipitation forecasts as far as rainfall. And across those areas of the southeast where we're seeing a lot of the heavy rain and those really strong thunderstorms with some of those torrential downpours here and there in spots. Where you see the areas in the dark blue, like near Atlanta and up into parts of the Midwest here, those are areas that could see 3/4 of an inch to maybe up to an inch of rainfall overall over the next 24 hours. But there could be spots of some heavier rain too. There might even be potential for some road closures with localized flash flooding where you see those heaviest thunderstorms across the southeast. So that's what's happening with the weather. We're going to get right to what's happening in the freight markets, looking across the country and also the Philadelphia market. Lots of charts to go through, lots of good information. Here is Zach Strickland. What's the first thing we want to talk about today,
All right,
Zach?
Nick, thanks. I'll get to your Philadelphia hometown here in a minute. But
thanks.
First off, what we're looking at is the outbound tender volume index for the national, the national outbound tender volume index, and it is on a seasonality chart. So we're seeing last year's volumes in the green here mapped over the top of this year's volumes in the blue. And you can see in the first week of April, we have this big dip. That's pretty traditional in terms of ending the quarter. Everybody pushes the freight off the dock, and then all of a sudden they take the week, and it's like, all right, guys, we had this big push, making their quotas, everything turns over. What I find interesting is that last year's volume was so much more volatile. You can see that it was, the end of the month high. Most of the month of March, we had a lot more volume.
Yeah,
and then all of a sudden, it dipped way down. So they were overheated. This is a traditional overheated pattern. This year is a lot smoother as we came out of the month of March, and then we've kind of gradually pulled back up here in the last few days.
Why do you think there was such a big difference between this time last year and
Last
now?
year there's a lot more volume coming out. There's a lot more excitement in general in March, for instance. Not necessarily in January and February, but March, this past March was certainly a lot more. If we go to the next chart, I kind of wanted to show what the rate volatility was doing as well. So we're kind of returning to what I think most people in the industry would have expected to be more traditional, normal pattern. So this is a seasonality chart of DAT's national rate prices. So this is the spot market price for the nation on average. So the green line is going to be the one last year. You see how much higher it is. You've got like a 30-something cent rate discrepancy.
Way higher.
Right here's the blue one. This is the year that we're currently in. You see this little gap here. That's because we're waiting on the data to kind of finalize, because this is for freight futures and the numbers have to be absolutely final. There's no changes to it. But you see, the point is, down here we're returning to the 2 years prior levels, like 2016, 2017 levels. We're back down here. We still haven't actually crossed back underneath any of these lines. which is something I think a lot of people are waiting on, but it's still staying a little bit
Might
higher.
happen.
Yeah.
Might happen, maybe.
It's possible for sure, especially.
But I mean, it's a big gap. Look at that.
Huge gap.
I mean, that's a huge gap.
Last year was insane. The year before was insane. So the market seems to be kind of settling back down. Not all the way back down, mind you, but it's still settling back down nonetheless. So if we go to the next chart, kind of wanted to, really get a little bit more focused. And
We're going to Philly, right? There we go,
going to
baby.
Philly, yeah. So
all right.
what we've got here is the volume index in Philly. So where is something actually happening that's kind of exciting right now? And Eastern Pennsylvania is one of the hot markets in the country right now because volumes are picking up significantly. Here in March, Philadelphia was very quiet. You see this white line right here? That's an average line. So this right here, this number is giving a value of 118.73. And the last week and a half, we're averaging 127.8.
Yeah, it's been picking up.
Pretty big difference. It's about a 3% increase over that. And then you see this bounce. We really didn't take the first week of April off in Philadelphia. Yeah, it cooled off a little bit, but now it's returning right back up to where it was.
Why Philly? Why volume going up out of Philly?
I don't know the why, but I just know that the volumes. I just know that the volumes.
Still
right
figuring
now
that part out. Okay.
I just know that the volumes. This is very near-time data, so I can't go out and figure out exactly what's going on in the market right now. But this is significant because it's a change of dynamic. You see, this big, bulky volume is starting to really pick up out of this part of the country. And if we go to the next chart, which is going to be one of my favorite charts, or watch lists, if you will. I show this one a lot because it gives you a relative indication.
The tree map.
The market share. So anything in green, day over day increases. Anything in red, day over day decreases in market share value. And if you remember what market share is, it's not straight volume. It's volume in relation to the rest of the country. So, volume could have gone up in Ontario, but it may not have gone up as much as some other markets in the rest of the country. That's not the case here, but if it had, it would still be a negative value even though volume increased. So what we're looking for here with the market share map is relative increases, like how strong is the market compared to the rest of the country. You see these bright greens over there in your neck of the woods?
Yep,
Philadelphia,
Philly,
Allentown,
there we go. Yeah.
Harrisburg, sitting down here. Harrisburg's a top 5 market in terms of volume. All of them showing up. And you got Columbus over here in Ohio. So this is important for freight because this is the corridor. This is a big corridor for freight in terms of outbound volumes. Philadelphia, Columbus, Chicago, that little I-70 corridor right there is very important in terms of freight volume and movement. So any carriers looking to book loads, ship things out of this area, they should know that there's actually an increase in volume. This might be an emerging market, change in dynamic, and this is going to come from multiple shippers. So it's not just one shipper creating a big spike in these areas. This is multiple areas, multiple regions, all independent of each other, but yet they're all huddled right there comfortably next to each other. So anybody that's trying to move freight into this area today is probably a good chance they're going to have more freight coming out, which is important for carriers because utilization is the big thing. So if we go to the next one, I kind of wanted to close up here and go over this concept of capacity being added to the market. And this is one of the indicators that looks like capacity is still being added to the market. It's not definitive, but I think we're all pretty comfortable in knowing that there's still a lot of additional trucks coming online right now. So what we have here are new truck orders for Class 8 trucks, which is your semi-trailers. And people that are pulling, the 53-footers down the road.
Right. That's the blue line, right?
That's the blue line. Okay. These are the new orders right here. You see last year, 2018, big change from 2017. Huge change. This is insane, the amount of new truck orders. A lot of that had to do with the fact that we had change to the tax codes. So I'm not going to get into tax code law or anything like that and have everybody click off.
But that was a driver, right?
But that was a big driver, and it basically incentivized the carriers to make these investments because effectively increasing or lessening their tax exposure over the next few years. So they put in all these orders. They're going to be seeding them because what else happened last year? You saw with the DAT rates, those rates got elevated. They had like 8, 9, 10% rate increases. Spot market was super active. This increased carrier profit margins. So as the profit margins expand, what are they going to do with all this excess money, Nick?
Buy trucks.
They buy trucks. They hire people.
That's
and we've got a couple of other indicators on here as well that I don't have pulled up, but the employment level for trucking was way up last year. The rate of growth was much higher than it had been in previous years, 3 to 4%. And then we also had the driver to non-driver ratio. For those of you familiar with Sonar would see this in our Truckload Carrier Association indexes, where we actually track the amount of drivers to the back office personnel. And that actually went up.
Wow, great data,
towards the end of the year. So that combined with this information suggests that we still there's more drivers being added to the market, not on just on the large carriers, but also the smaller carriers.
That's great news.
This green line right here is more conducive, or it relays what the smaller carriers and owner operators are doing, because the large carriers buy the new orders. They have the credit to do it. They go and buy from Daimler, Volvo and all that. And then what happens after about 3 years, they sell them off because it costs too much to maintain and they want to replenish their fleets. What happens, the smaller carriers come in, maybe not as much credit, not as much free cash flow, and they'll buy up the used trucks. And you see that the price is going up in terms, so it's not a full on, like I've talked about in the past. Just because the price goes up doesn't mean necessarily that there's more volume, but it is an indication that demand is outweighing supply right now, which feels pretty safe combined with a few other statistical measures that we're still seeing these people entering the market. A lot of these smaller carriers that had these drivers, they're looking to get out of this small carrier. They want to go and start their own business. They want to be their own boss. So they're going to start, buying their own trucks on the used truck market, start their own business. So it's a slow kind of ripple effect from this, super hot trucking market in 2017, 2018 that's created this ripple effect. And we're still seeing these impacts today.
It's very interesting.
Yeah, this is really important because it would continue to drive rates down as we supply the market. Yeah.
Of course,
Yeah, so.
Zach, thanks for being here again today. Great information. We hope that it helps all of you out there in one way or another. And you can join us every business day starting at 4 p.m. on FreightWaves.com. That's where you'll see our FreightWaves Now video. You can also subscribe to our YouTube channel and watch our FreightWaves Now videos there as well. We hope you have a great Monday. Enjoy the rest of the week, and we'll see you back here tomorrow.